Hi, welcome to Africa Tech Summit Connects, our digital series, sharing insights from across the African tech ecosystem. We're going to start in a couple of moments. We're delighted you can join us. Obviously, COVID right now is wreaking havoc across the global economy. It's a human tragedy, of course, first, business second. But African technology is definitely not immune to what's going to unravel over the next couple of months and years. So we're delighted to host the first of our series of webinars looking at the different areas that are going to be affected in African technology. Today's first series is Ventures Triage, Survival Strategies in a Downturn. And I'm delighted today to welcome our panel, Kenza Lahlou, Managing Partner of Outlierz Ventures, and Ido Sum, partner of TLcom Capital. Anybody in African tech will already know these guys. They've been opening checkbooks for a while, and are good commentators on what's going on across the continent in terms of their own portfolios and the ecosystem in general. So if I start with, welcome to you both. Hope you're doing okay.
Thank you very much. We are.
If I start with you, Kenza, in North Africa, I mean, if we just look at COVID right now, what's the current state of play, lockdowns, etc.? What are you seeing in North Africa?
Well, for North Africa, I can speak about Morocco, where I am based. Everything is on lockdown. I think it's the same in many of the countries in Europe and the US as well. So we've been on lockdown for the past 3 weeks now. Of course, schools are closed. It's mainly work from home. And people are trying to respect as much as possible the confinement so that we can hopefully reduce the number of cases. And we are very lucky that the government took it seriously early and really took the right measures very early on.
And in terms of your portfolio companies, how so far has the impact been?
Well, we are lucky because our investment thesis from the start of the fund has been to invest in fundamental problems, in companies that are really solving real problems. So what's happening now is only strengthening that, to show that basic services will always be needed, and much more during those times. So digitalization of the economy, I think it only shows that it's something that we should take very seriously, and we should double down our investment in that. But of course, not all sectors, not all activities. So for companies that are doing food supply deliveries, for example, those who are working on the supply chain of FMCG, grocery food supply to small shops across the countries and the cities, the rural areas as well. They have been doing great and actually accelerating their growth. They're continuing their work and taking other measures to be safe for the employees and for their clients. And they are very necessary basic needs. So that's great. So actually, in all crises and recessions, there will be goods and bads. So we have in our portfolio companies some that are more affected by the crisis. But overall, we are lucky that the majority of them actually are doing great and still growing.
And Ido, if we come to you and your portfolio, I know you've got a lot of different investments across the continent. If you can speak around the different regions and what you're seeing.
So I think, as Kenza was saying, we're seeing lots of similarities in terms of the way this is working in different regions right now. As a team, we're weirdly split at this time between Palo Alto, London, Nairobi, and Lagos. So we have very different perspectives, but I think all going through fairly similar experiences. Nairobi probably being the most open to an extent, with the night curfew vis-a-vis a full lockdown. But in practice, most people work from home, and it's fairly similar to other places. Lagos has been in full lockdown now for the second week, London for longer, and California pretty much the same as London. In terms of portfolio, I think it affects differently each of the companies. We had been making a lot of effort in the past month and a bit to go through company by company with the teams, with the founders, with the CEOs, to look through the implications to their companies. And it's not a one-off, it's something we do consistently week in, week out as circumstances and our understanding is changing. For some, I think this, as Kenza said, is a clear opportunity, especially for those in logistics. We have a couple of companies doing that. For those in remote education, online education, that's also, we had seen a very interesting uptake in downloads and usage of the service. For others, it's a mixed bag, especially in the software as a service solutions. I think whatever you can serve as solving a problem and reducing cost at this point in time is attractive. Whatever is more about growth and more value creation and so on, that's in lower demand. And I think there are lots of things in play, from higher expected evaluation to trying to understand what will happen to consumer markets locally and globally. So we're assessing every week and trying to think through it together with our companies.
Okay, great. I think we will come back to some of the opportunities later on. But if we look right now, we've got ventures with no customers, we've got lockdowns, we've got cash crunching going on. If we look at some of the key strategies right now, I'll start with you, Kenza, in terms of what kind of strategies are you telling your ventures to implement, or would you tell other ventures right now to implement? What are the key kind of strategies right now?
Yeah, well, it's for sure an unprecedented time. We need to take it it's serious, it's real everywhere in the world. Like no one had really planned for that. So we are navigating through it day by day with our portfolio companies. And for sure, there are some common sense things to do and some important things to take into account right now, or as early as possible. So first, what we say to our portfolio companies is to really make sure they have the enough runway to stay last as much as possible and to be able to sustain themselves. So it's really cut costs, starting by all the things that are not necessary. For example, digital marketing or anything that they could do without. So this is the first thing. For example, if they really need, they can think also of renegotiating their rent and finding the right, agreement with their landlord to facilitate that, because it's in their interest of the landlord that they can last for the long term. So we're trying to help them think of this kind of strategies or ideas to find ways to really reduce costs as much as possible and extend their runway. For those that are fundraising, well, we are also lucky because most of our portfolio companies, for like a happy reason, they had most of them had just closed the round, whether it was the seed round, the Series A round, or the bridge, just before between December to March. But of course, we have others that were planning to do so. So for those who are planning to fundraise, it's not at all a good time. So the advice that we'll give to any founder is that if you're not in an industry that that's accelerated in the positive way by the crisis, don't try to raise now. It's not a good time. Think of postponing that. And if you need to raise because you need to sustain yourself and get more runway, then go first to your existing investors. I think this is the first thing to do. It's not a good idea to try to connect with new investors, because even the situation first, everyone is more risk averse, but also if the business unit economics and growth doesn't show that it's a good, there is growth and it's a good time to raise, then it's not going to be on their favor. And maybe the last thing is for those who have been in the process of raising and they have already commitments, maybe think of reviewing the valuation a little bit less, so that they can close fast. Yeah, so that would be our advice.
And survival strategies you're implementing and your ventures are implementing now. What kind of are the top kind of strategies you're
Well, I think, Kenza touched on a bunch, but clearly cash is king at such period. We have 2/3 of the portfolio undergoing some form of bridge at this point in time, under the assumption that new rounds, whatever was planned from March this year to December this year, is probably not happening, especially the bigger rounds and the one dependent on larger international investors, which just technically will not be able to travel, most probably in 2020. Potentially longer, but that's our assumption for now. The other thing, for all those that have a strong Nigeria presence, looking through the devaluation and what does it mean to their cash flow, so analyzing separately the cost and revenues that are in Naira and not in Naira, and trying to understand the different implications of different new Naira ratios to US dollars. And we are now thinking through any number between 5 and 650, probably 550 to 600. So we're talking about a minimum of 50% cut, which implies a lot on the cost side, as well as on valuations, if anyone was planning around. So we're trying to avoid price rounds and focus on bridges for the near future, to just push that conversation a bit further out when we have more clarity. Now, in more detail, it's going through their customers and assessing the fragility or sustainability of the different customers. And I think we had seen clearly with some companies that a certain sector or type of customers remain strong and interested, versus a different type or sector of customers that is right now much more aware of its own cost structure and so on. So really where to focus the little spend on marketing and sales efforts, more so with the inability to travel again. So where do you really spend your time chasing people? So I think doing this very, very detailed pipeline analysis is key. Make sure that you speak to all your existing customers and understand not just that they're still happy with the service, but also the payment terms and how are they going to pay, if they're going to pay, again, and the implication on cash flow in the short term. So all of these things alongside making sure that you can really work from home. I mean, it sounds easy, but not all companies can work from home. And yes, each of us can maybe open his own laptop at home, but if you're connected to customer service systems, or more so if you work at a warehouse and need to sort vegetables, or you're a truck driver and need to drive from one point to another, that's a bit tougher. So really, what does it mean? What do these lockdowns mean to companies who employ hundreds of people in different locations, in different time zones, and so on and so forth?
And Kenza, I know we spoke earlier this week. You mentioned some innovative ways in terms of reducing the payroll and things that have been done in Morocco around staffing.
Yeah, well, it's hard. I mean, first, as we mentioned, I think Ido and I, it's first cutting costs that are not necessary. Anything that you can do that is not harming someone. But of course, once you get through all the non-necessary things, from the most like the easiest to like the hardest things, when you get to salaries, then it's a tougher conversation. And there are, as we spoke about, some innovative way to do it without avoiding to lay off people. But first, of course, if you work with contractors that you don't really need at this time, maybe it's not the right time to reconduct the contract and maybe to like pause it for now. And then something else that we touched on that is very interesting in Morocco, but I'm not sure about what's the possibilities in other countries, is that we have a specific legal status for people to work as contractors. It's called safe entrepreneurs. That is taxed at 1% instead of 45% with all the social security taxes and everything. So it's a really interesting status to be on, even for your internal team. So we push our companies to try to move some of their staff from full-time employees on their payroll to this kind of contract just for this period, so that they can still pay them the salary the same, but be less taxed. So it really lightened their payroll. But of course, it's capped. It's not, you cannot do it for anyone with any level of salary. It's capped to a level of salary. So it's more for junior people. So this has been a good solution so far.
in terms of equity, is equity being used more now by ventures in lieu of cash? Is that a valuable strategy right now?
Yeah, I think that one of the things, and especially when you cut costs, it's always easier to cut at the lower the lower part of the pyramid in such times, with actually the ones who are least immune to being let go at a period like that, or the people who are typically making the least. So we are trying to start from top management. Actually, it came from management. So most top managements were willing to propose as a first step a cut on their behalf, and at times we're incentivizing this with saying that whatever we save on that for a period of time can potentially be acknowledged as an equity contribution. There are various ways and mechanics to do it, and I think this is becoming a little bit too specific, but as an idea, this is another way to find to keep people motivated while you clearly are taking away some of their income for not just a week or two. I mean, this is probably going to go a little bit longer.
Yeah, I mean, the book Lean Startup was written about keeping startups lean. I think now is he must be selling a lot of copies in terms of multiplying, how you can make these dollars count. I also heard an interesting stat last week, which was, every dollar you spend is a test, and if that dollar is not returning anything on that dollar, you need to cut that call.
I just want to make a point here that is sometimes a little bit forgotten in all these very clear conversations about cost cutting and letting go of people and so on and so forth. I think this is the flip side of that. Is this is a period of time that the people that will stick around will most probably stick around for very, very long. So if you can build trust in such a time with your team and make them feel that you are there for them when they need you the most, because for most people now, there were two people working in the household, maybe just one is still being paid. There's a lot of unclarity about many things. So losing your job at this point is not such a great outcome, and your ability to find a new one might be very different from what it was 3 months ago. So I think that before we jump into letting people go, there, between your zero and your full salary, there are lots of numbers typically. And I think that by very open conversations about joint commitment vis-a-vis I need to cut and you need to go, there are many midways and paths there that can pay a lot of benefits later, especially around the people for whom you care more. And for teams at large, I think team spirit is going to count a lot in a time like that. So my only advice would be, yes, we are preaching to cut costs and survive for longer, but let's not forget that these are people, and the culture you build in a time like that will reflect for way longer than what you might think. So think very thoroughly through what are you projecting to your employees and teammates.
Yeah, and I suppose we're speaking more on the business side here, but if we kind of hone into the founder and the guy who right now is left holding, or co-founders who are holding the baby, what kind of advice do you have for people listening today who are really, really struggling in terms of their business, their finance? I mean, what kind of advice do you have to those? And sorry, to those who are listening today, we'll have question and answers. There's a Q&A tab at the bottom of the screen, so please keep your questions coming. We'll get to them later on. But if we go back to that, the founder, what's the advice to the founder today in terms of coping?
Maybe I just want, before answering that, and it's in the same line, I just want to double down on what just Ido said, because it's very important. I think it's a time when you can see how resilient is your team and how committed they are. So it's a great stress test, but also it's the time that you have to step in and then make sure that you show that you are making the best you can to keep everyone safe. So, and it's also like taking decisions for the community. So instead of saying, okay, I'm gonna lay off 2 people and then keep the others, maybe think of, I've seen companies doing something interesting, and they reduce the salary, I would say, for like a little, but they give them, it's like they work 3 days a week or 4 days a week, and they're not getting paid on their free day, and they can use it as they want. Well, it's not ideal, but at least everyone is in the same, have the same strategy, and they share that instead of having to let go people. So I think it's a great sense of community. As for the advice, maybe this is a time where you have to be psychologically strong, and you are as a leader, as an entrepreneur, you need to show the example to your team and keep this community, this feeling going. It's hard, it's not easy because the time is it's a lot of stress, especially for the founder. But I think first taking care of yourself as a person and being healthy, eating well, sleeping well, doing exercise at home, I think is very important. You can do yoga, you can do meditation, you can do exercise. This helps think, just like have your mind free a little bit and be more available to think through this situation. And also maybe do team meetings, virtual team meetings, so that you can set objectives. You can talk with your team first and really share, and also set some objectives and make sure that things are going good, and then think together. I think it's a great time to be able to rethink the strategy and the vision, even with very less, a lot of uncertainty and less visibility. And also it's a great time to do something to explore new opportunities. So it's a great time to talk to your customers, because maybe, on the day-to-day, people are, on the business day-to-day, where entrepreneurs are very busy, they don't have time to do that. So maybe it's an opportunity to go and talk to more customers and understand how you can help them and build this link. And also maybe do some training for your team. Give them, the ability to grow, to keep growing in the company, even if the business is slowing down. So those will be some advices. And then, of course, on the business planning, this is something else. But I will let Ido share more thoughts.
Yeah, I think really a couple of things. First, it's tough, and I'm not jealous at any founder or entrepreneur in a time like this, but this is where it counts. And first, if a company does not survive that for a long list of very good reasons, it doesn't make the person lesser of a person. So it is a very unique time, and I think that there are companies who won't make it through, and that's okay. It doesn't make their founders less worthy. But I do think it is a time to do a couple of things. First, prioritize. I cannot highlight enough, but yes, we're at home 24/7. So supposedly days are longer, but we are there with our kids, with our partners, with our parents, with other people we need to take care of. I'm sure that many people have discovered that they have many more commitments that in their usual day-to-day they don't need to take care of, and now they do. Again, in relation to family, I can tell you that here in London, just doing groceries is about a 2.5-hour adventure every time, with the masks and gloves and whatever. So you don't have more time, you actually have less time, and you're also not 100% centered on the business 24/7. You need to take care of many other things. So make sure that in the time you are working, you're focusing on very few things and the ones that matter. So we've touched before on what they are, and they could be, of course, adjusted for every specific business, but don't keep working with endless to-do lists and be frustrated that you're not getting there. Make sure that they're short, that you have 3 or 5 or 10 things to do a day, and that you do them, and you don't do more than that. If you're done, go do something else, because you have many other things that are unrelated to your business. So that would be the first. The second is really the rest of your people are in the same boat. So pressing them to death will not necessarily help. Yes, of course, you need to stress and to push at times, and working under deadlines and cash constraints and so on. But do remember that all of them are going through pretty much what you're going with, at times even less certainty. So just be very open and very honest, two-way, about yourself, and listening to their challenges. I know this sounds a little bit like a coaching session vis-a-vis a VC investment session, but I do think that in times like this, that would count more than a specific Excel row that you might add, that will do magic or something different.
That was really good. And if we get now to, get back to the fundraising side and cash, cash is king right now. Everybody's looking to, as Kenza said, some of your portfolio are very, very lucky to have closed rounds. So those guys are quite happy. But it's it's the big area. Everyone is trying to get hold of cash and raise cash, and we're gonna cover some of our own questions, but I'm also going to open it up. I just see a question coming in there from Rob Whittigan from SoCo. Hi to Rob. Curious to hear your thoughts on Corona impact on LP funding appetite for Africa VC. If adverse, what sources of capital would you recommend startups to pursue? Who wants to take?
So I'm also
first?
curious, but no, I think a few thoughts here. I think there are two layers here, right? There's the GP layer, and then there is the LP layer. GP are funds like ourselves and their ability to invest in startups, which I assume is most people listening in. And then is the ability of people like ourselves to keep on fundraising for new funds. I think, there are lots of similarities, but they're not exactly the same. So just going quickly one by one, the LP's appetite, from the little I know, exists, but things are on hold. So if I have to guess, we will not see lots of funds closed in the next couple of months. You might see announcements of funds that had closed and the commitments were made. These are typically processes of a few years. So, announcements coming out in the next week are probably of things that have closed 3 to 6 months ago. And I think these will remain, and whoever has a fund in place, I don't see the LPs shying away. More so the DFIs are fully committed to this situation. But I do think there will be a slowdown because there's less free money in the market. DFIs are still figuring out what's going on and are taking their time a little bit with new funds. I'm more convinced that private money and commercial money that is non-deal flow, and that's not too clear at this point for many family offices and pension funds and so on, who took major hits on public markets and on other investments. So my personal guess is that a lot of the funds that were in pipeline will be delayed. We will see less closings in 2020 than we saw before, and probably some of these won't make it, and some of these will be pushed at least a year out. I know at least one fund that had decided to pull off their fundraising last week, with or without connection to this. They've been around for a very long time, a very strong team, and I'm sure that there are more of that. As for GPs, I think those that have money will keep investing. Again, I think that luckily for the both of us, we have funds that are alive. There are quite a few other funds that are alive, Partech, Flourish, Corona, and so on and so forth. People that have the money will keep investing it. It might be slightly slower. I think we're all adjusting. We're all now at the end of the year, we pretty much meet our investments target for the year, even if there will be a few weeks of a slowdown in which we are right now, even just trying to understand how we do due diligence without meeting physically the teams, which wasn't the case until a couple of weeks ago. I would then make sure that when you're talking to people, you're talking to people who do have the money now and are not waiting for new money to be closed, because these might be very lengthy conversations.
Just coming back to that point, I mean, on the due diligence and actually, meeting investors on the ground. I mean, how hard is it going to be for ventures to raise money? As Kenza touched on earlier, reach out to people who you're already connected with or warm with, because, reaching out fresh now, is it impossible to close deals with people who you haven't met for you as an investor?
Ido, this is for you.
For me, okay. I don't think it's impossible, and I think it's going to be harder. We still get the same inbound as before. I think that it has little to do with Corona. There's always a preference to sort of warm introductions over completely cold calls. Not that it's not a decision, but it's just a mental, I think, bent of most investors to look first at things that came to people they trust. So if you have a possibility to reach out to one of our founders or co-investors or people that we know, it's always slightly better, more so at a time like this. But we're still looking at our inboxes, and I think that if interesting things will come, we're looking at it. I do expect most people in their pitches, could be in their email and their deck, and for sure when we speak, to have thought through about the implication of that to their business, to their business plan. I don't want to see business plans for 3 months ago. I don't want to hear, you know, valuation expectations of 3 months ago. Sorry, we're in a new era, at least for the foreseeable future, you know, for the rest of this year. So things are different. And if you did not bother to think through the adjustments of your business and business plan to this reality, I'm not going to spend my time trying to help you out think through that.
Yeah, so maybe on that.
Kenza, anything you want to add there?
Yes. So can you hear me? Okay. So yeah, so the idea here is, I think my advice was first to get to your for those who are not, so there are two cases. Okay, I'm going to start back. Two cases. Companies that are able to maintain their activity or even to grow during the crisis, this is a great time for them to fundraise because there are very few and investors are looking for great opportunities. We are actively looking and actively investing actually, and we are seeing new opportunities that maybe we have had seen before, but now makes even more sense. So this is one. And secondly, for those who has like are very impacted by the crisis and their activity has slowed down or even like shut down, I don't think it's the right time for them to fundraise at all. So the only way they have, if they need to get outside capital, would be to reach to their existing investors. And this is where I was saying it's not the right time to reach out to new investors that you want to show how great you are doing, because if your activity is like completely locked down, like shut down, and you don't have visibility on when it's gonna be back again, that's not gonna pay on your favor for sure. So we have been actively investing, and we see great opportunities, for example, in health tech. It's a great time to invest in this kind of companies that are solving those real problems. And we see much more than ever that things like telemedicine or increasing public hospitals capacity is key, and is actually growing very fast in these times. So so we have been we are still investing, but maybe we'll take a more calculated risk as usual, but considering the situation, and maybe sometimes we'll of course we will do only safe and bridges with the caps, and we would maybe sometimes lower our tickets. So it depends. It's really case by case, and but I think it's. I don't think VC should stop investing, or startup entrepreneurs should think it's not the right time to fundraise. If their activity is doing well, this is actually a unique opportunity.
Okay, I just see a question there from Lawrence who said, for startups in telemedicine and online medical, how do you think the startup would fundraise for capital for growth? I think you've just answered that question, that you guys are still open and looking for opportunity in those. One other question that's come in, what do you think is the minimum runway needed to pass this crisis? I mean, nobody's got a crystal ball right now. Nobody knows how long this crisis is going to last. In terms of your own ventures, what are you advising them in terms of a runway that, no two companies are the same, but for Alberto Anton, who's asked this question, what do you think is the minimum runway?
I think that at this point, look, there are many versions to it, and I'm the last one to form an opinion, as I'm not an epidemiologist or anything of that sort. But I think there is a realization now that we're looking at a couple of months of this sort of full lockdown, out of which we'll start getting out in a sequence, at some point between May and June, depends where, and then probably moving into some form of a dance era in which we will try and hit the right outbreaks again, and go more restrained and more open for a period. With that, for a year to 18 months until there is some form of solution, of a wider solution. With that in mind, I would think that the first milestone to have in mind is the end of this year. So we're now in the first week of April or second week of April. Try and plan how you first get as a minimum to the end of 2020. I don't see lots of travel happening before. I don't see lots of new money coming into the system before. So I would think that this is where you should be looking at. if you are in a luckier position, think again, as usual, a minimum of 12 to 18 months ahead, but bridges tend to be for less than that, so probably 9 to 12 months. If you're looking for a bridge is sort of the right framework, under the assumption that it will take you, 3-4 months to raise the actual next round, and it will start towards the end of this year to close in December, January, February.
Kenza, do you have anything you want to add to that? Or?
No, I think Ido answered the question. I had the same numbers in mind, 9 to 12, but it's really case by case.
Yeah, and moving on to valuations. I know we touched on it briefly earlier, but and a question as well come in, which I'll get to in a second. But where are valuations now versus 4 weeks ago for you as investors, and also in terms of, Ido mentioned the 50% depreciation in the Naira, which straight away has a huge implication. But what's your advice for founders now in terms of valuations?
Be reasonable. I mean, I think that, look, the way we value is a little bit different from some other investors, or so I had found. I didn't think so, but we value typically by taking your business plan 5 years out, looking at public multiples and what private deals are made for, getting some multiple sense, and time that your EBITDA or revenues or a combination of the two 5 years from today, then divided by whatever we would like to have as a return, and that's a value now. The things that have changed in that is that we're seeing public multiples, publicly traded companies multiples going fairly sharply down, and I think we're still very far from the bottom of that. Yes, it will fix itself over a period of time, but many people that I speak to in public markets assume that this is not a very, this is not a V-shaped thing. There's going to be a U or a W, but it's going to be long and potentially a little bit painful. So that means that these companies will have less cash to buy things, and less cash for M&As, less cash for all sorts of acquisitions, and less cash for expansion into new markets, which Africa is supposedly a new market for many of them. That could also be the case for less new private equity funds that are potential financial buyers in a couple of years from now. So I think we need to be realistic. And also, if we're in, unfortunately, Nigeria, multiplying an Naira number by whatever multiple that was, as you were mentioning, this will be a smaller number, potentially in a couple of months. We're still trying to make sense of all of that. And this is why we're trying to use short-term, if we can, sort of less priced mechanisms, or in other words, convertible loans, safes, and so forth. I do think that it's very different sector from sector, because the dynamics of every sector are very different. But people should expect that these two things, the currency devaluation plus our thought that less money will be spent on acquisitions over the next couple of years, is two things that play together. What does it mean for valuation? That it's probably a little bit lower than what you were hoping for 3 months ago. I don't think, it's not zero. I don't think, we have an intent now to own 99.5% of our potential investee company. We're still minority. We still want very incentivized founders. But these things, when you think through your own company valuation, these are the things to think through.
Is on that point, I mean, is there a danger that founders now take the wrong deal? I mean, chasing for survival, they take, and I mean, they give away too much equity, or give away to investors who are really trying to take a lion's share right now because of the opportunity.
I think that, look, at the end of the day, investors are, clearly not the smartest humans, but are also not the dumbest, I would like to believe. And hence, I think that as a community, and we're speaking to a lot of the other funds on a very tighter basis than before, there is no intent to really take advantage. I mean, yes, we need to make money, and we would like to make money. And if you can get a more reasonable valuation now, that's good. But the driver will be not to squeeze the founder. The driver will be, make sure that the next round, if we're doing a bridge or if we're doing a smaller round, that the next round, that is not in 5 years, that's probably in 18 months. Okay, when you will still see lower multiples, and you will still see less money in the market, okay, you will need to get more money in, will be some sort of an up round vis-a-vis a down or a flat round. So you still leave some room for that under the assumptions that revenues will grow differently, potentially a little bit slower, depending. Some companies may be faster than what you thought before. So you need to assess the implication of COVID on your revenues in the next 18 months. What does this mean for your next round? And then leave some room for maneuvering there. I've not seen yet many of the people I work with and speak to trying to really take advantage. It is just trying to be reasonable, and these are very open conversations with the founders. Is there a risk of taking the wrong deal? Yes. And if the choice is no money or no a deal or no company, I assume that most founders will go for the bad deal, but it is what it is right now.
Yeah, Kenza, you want to add anything to that?
Yeah, well, I think Ido summed it well. I think for sure valuation would have to be more reasonable, and I think that before there was kind of a hype, so it's also correcting a little bit the market, but it's like I think founders have to be more realistic, and even for those who are trying to raise still at high valuation, we'll see on the market how the market responds and how investors are considering that, and will readjust accordingly. But maybe one way to do it is to try to raise, to avoid being too diluted, is to maybe raise a little bit less at a lower valuation, so that the next round you can still raise at a higher valuation and get where you want it. So yeah, this is like some kind of threshold, some kind of choices that you need to do, and it has to be realistic and still open conversation with investors that are not here to take advantage, but really to find a fair deal. I think this is what we all want.
Okay.
There are other questions there, Andrew. Do we want to try and go through
Yeah, we got a lot of questions. So crisis equals opportunity from Kenza and Filbert. Any guidance on how to leverage those? So yeah, I mean, opportunity, we're talking about a lot about, saving businesses, but there is a lot of opportunity. Kenza mentioned telemedicine and medtech. If you guys want to cover, what are the other opportunities you're seeing in the crisis?
So I think there are opportunities in a sector level. So clearly some sectors are a bit more fundamental, quote unquote, in the short term. Clearly logistics, anything around medical services, medical insurance. I think we might see an interesting pickup just because people are starting to understand the meaning of not having one in countries that have weaker public health systems. But I do think that everything that digitizes, and we might see an uptick in digital banking or in mobile banking, in payments, in markets that were less exposed to that and more cash driven, because now things need to be more remote and people are spending less time outside looking for more things online. So I think there are many sectors, and I don't think we can touch on all of them. I think there is an opportunity. Pretty much we went through with each of our portfolio companies to potential opportunities, and there is an opportunity for each of them, and it just looks different. So for some it's because of the sector. For some it's because there's a lot of talent out there right now that is cheaper than what is and more accessible than what it was before. For some it's because that they can potentially collaborate with corporates or government on some initiatives and position themselves as the market thought leaders, or at least part of the thought leadership in their sector, and make sure that they're benefiting from whatever that is, not in a bad way, in a very good way, by contributing more to shaping solutions that are required at this point. We have some of our portfolio companies leading such initiatives in their respective markets. So I think the short answer is there is a lot of opportunity. The real answer is it's very different for each company. So it's a little bit hard to give a very generic answer here.
Kenza, any other opportunities you see? Even for companies who are pivoting, I suppose, as well with input.
Yeah, well, it's harder for the pivot. It will really depend on a case by case, on the company sector and activities. So, but of course, we have some company doing logistics that you know, some of their clients, because it's B2B logistics, B2B2C, some part of the clients are not are slowing down their activities, but others are like increasing, and it's time for them to find those types of clients that need logistics and delivery at this time. So in this case, well, there is a way to find out growth opportunities. It's still hard, but for founders that are starting a company or are thinking of what real problems there is to solve, in the past few weeks, what we've seen companies thriving in edtech for sure. EdTech has been big, it's like bigger than before, especially in Africa, where it was not something, the behaviors were not already there maybe, and now it's just more obvious. Health, of course, health tech, fintech as well, in terms of digital payments, so that people avoid touching cash, and also cross-border payments. We've seen companies doing really well in this because it's really like a way for families to send money back home. So there are a couple of logistics, food. Of course, food is big, and you know, surprisingly, in Morocco, for example, e-commerce was not really working because e-commerce in Africa, B2C, it's still hard. The market, you know, behaviors are not there yet. But now with what's happening, e-commerce has been booming. Jumia is overwhelmed, and Glovo and all those kind of food deliveries. I'm not sure long term it's gonna make sense. I don't know how it's gonna change the behavior of people, but I'm sure it's gonna educate a bit more the market. So those are those kind of opportunities that entrepreneurs can explore.
I think just a quick comment here. I think the interesting thing that is happening is this is really distilling sort of the actual real needs from the things we think we need. You know, at large, of course, some people still consume everything they consumed before, just a little bit differently. But for the very large majority of people, and more so for businesses, in such a time, you really focus on the stuff you need. And that means for entrepreneurs and founders, there's a really great time to understand who are you really serving and what are you really solving. It might be very different than what you thought before. And the value proposition is really crystallized in such a time. And I think it is a time for, especially for those in earlier stages, to think, who are they really solving something very material for? You know, we always go back to the basics of either higher value or lower cost. It's probably the time of lower cost versus higher value, but really, who can you solve a true problem for at a lower cost than any other existing solution, and hound down on that.
Okay. One question, I'm not sure either of you are involved in this sector, and it's probably one of the hardest hit sectors, but there's a question which is, can you give any advice to entrepreneurs in the travel or tourism and accommodation industry? I mean, probably the hardest hit sector.
I think to the last point made, this is people will not travel for a while, and what is a while, I know is good. Just like anyone else, I have no clue. But are there other services that you can provide at such a time that are around, I don't know, education, education activities for people who are lonely at home, whether elderly or younger, things that you can do that are around, because travel, yes, there's the travel part of travel, the actual physical piece of moving from one place to another, but then there's the leisure and experience part of it. So can you do anything around that part in a different way, and a value proposition on which people will be willing to spend time and money, hopefully as well, in such a time? It's not a great advice, but this is what I can do.
Yeah, I think people are dreaming to travel right now, so it's a good time to make them explore new destinations, and maybe make them really want to do it, so that once they can, they will go to on your website to do that. So it's building those relationships, it's nurturing people, giving them things that can like add some value at this point. Not as, of course, not you cannot help them travel, but at least mentally. And yes, I think Ido, I agree with that.
I think what I've seen in the restaurant space as well is some restaurants offering, future discounts. So you buy a bond which gives you 30% off in future, and future selling demand in some way. But yeah, it's a really tough sector. David Ross, who I'm assuming is in Kigali. He's from Carnegie Mellon. The great financial crisis of 28 seemed to have reached the bottom when Berkshire Hathaway invested in Goldman Sachs. What are your indicators you're seeing, economically or otherwise, which will tell us the bottom of the crisis? That's a big one.
Yeah. Well, I wish I knew, but I think that very high level, the way to think about it is what we saw is probably the hysteria from COVID, from not dying, and that was the 30-40% drop in markets, which now corrected roughly half of that back up. So markets are now about 20% down from what they were in their peak in January. I think what we have not seen yet is the actual implication of the outcome of COVID. So not just people getting sick, dying, or recovering, but what does it mean for the economy? And I think once we will go back to a little bit more normal life, and we will start understanding which businesses made it and which businesses didn't, and there will be quite a few who might collapse, from the very obvious large airway companies to some of the travel, some other industries. We might see some big collapses, and I think that will drive a second wave of realization of what was lost. I mean, right now we're saying the cost of the world stopping for 3 months plus was losing only 20%. It doesn't sound very sensible. It should be a little bit more than that. And hence my guess, and this is truly a guess, is that there might be a second wave coming actually after we see some loosen up and going back to a little bit of normality, and some businesses then collapsing and realizing what that means to economy, or even countries having a very hard time, like Spain and Italy, who didn't start this period too well. How does their economies act, and bonds and so on and so forth.
Coming back to, I know, Kenza, early on we spoke around, cutting costs, and you mentioned one of the costs was cutting, digital marketing, cutting back and spend, and then we hear other people saying, how do we sell? And, so there's a double-edged sword of cutting back. But one question that's come through is, what smart marketing strategies have you seen in the market? I mean, are any of your portfolio doing anything that's of interest that other companies could learn from?
Well, yes. I think is how the company serving the customers in times of crisis. How are they helping them? How are they providing value to them in times of crisis? So it depends on the activity. And again, for those who are lucky enough to be in a sector that is actually still needed. So for example, for cash transfers, saying you can still send money to your family during crisis without having to go out of your house. So those kind of communications, when there is real interest and that it's the value that you're providing is needed in this time, and you can make a sell out of it, then yes, it's worth it, and it has to be directed to that. Otherwise, it's content marketing, so more content to educate the customers. What I've seen so far, that also is interesting. So those are the two ideas that I thought was more interesting.
Okay, another quick question. If companies wish to support businesses through the crisis by providing products or platforms for free, would this be looked unfavorably by investors due to lack of proof of business model, lack of revenue despite user traction? So giving stuff away for free, does that prove a business case?
I don't think there is a generic no in here. So I think that as long as first, it's a good time to contribute to the wider population, at any capacity, either volunteering, helping those in actual need, either by donating money, either by whatever each chooses. Now, as a company, you do have some responsibility towards your shareholders, unfortunately, so you are not completely unconstrained in that regard. But I think, most folks are fairly reasonable. So as long as it makes, if you say, well, look, I'm letting go, and for the next 6 months I'll spend all the cash I have left on on helping the world, that's great. But if I want to donate, I'll do it directly, not via a company and the fund. But on the spectrum of helping, I think that we would encourage companies to find a way to get engaged with the community. There are also ways to do it, in a way that might not necessarily benefit you economically tomorrow, but will benefit your brand, will benefit your ethos with your employees, will do other things. So generally speaking, there are lots of smart ways to do it. I'm not opposing, as long as it doesn't go too crazy or wild or becomes the only thing the company does.
Yeah, just on this, I've seen companies offering free premium to all their previous users, for example. So it's a great way to build this link and to really make people get used and like your content so that they can subscribe next. So it's a great way to build fidelity. But as long as it doesn't cost you too much. For sure.
We're getting close to the end now, so I suppose we've covered a huge amount. But what are your key takeaways now and key pieces of advice for founders and ventures who are here today on survival? And sorry, one other part of that question, which I forgot to ask earlier, was at what point as a venture do you say we need to call it a day? There's a lot of companies trying to kind of fight their way through this crisis who maybe might not make it. At what point do you say this business isn't going to work, and will this crisis just find businesses that weren't meant to be, or is it just a really bad time? Who wants to take that? There was a couple of questions in there.
Yeah, I think, well, first, the hard truth is that not all companies were meant to be. Not all ventures were meant to be, and not all ventures were meant to raise money. And that, again, they can be great ventures without raising any money from anyone. I think there is never such a time that, there is never lots of clarity around that point in time. And having been there as a founder before, and also while fundraising this fund, at a couple of points, it's always a very tough judgment call to make. But I think, if you wake up in the morning and you're still 100% convinced that whatever it is you're doing needs to be happening and you're the person to be doing it, that's great. And you should keep on pursuing. And the day that you wake up and the feeling is that either you're not the person to be leading it or the world is not interested, and once this hesitation comes to play, that's a very, very good, I think it's very hard to go back from that point. Which is a little bit like in relationships or many other things. But I don't think there is a really good advice on when that day is or what are the indicators. I don't think they're true indicators. If you're still willing to, quote unquote, commit suicide on accomplishing whatever it is that you set yourself up for, you should go for it. That's fine.
Kenza?
Yeah, it's a tough question, and it's a tough time actually, but it's real. So I see it, I think it's a life experience. We go through challenges all the time in our personal life, professional life, and I think this is one of them, both personal and professional. So I think it's good to take some distance sometime and also look at it in a more philosophical way to say, well, this is happening. It's here. Mm-hmm. So, and the good news is that you're not the only one. Everyone is gonna go through this. So do whatever you can and try to always, think of your mental health and try to keep to stay as much as possible, because it's a marathon. It's not you don't have to speed to get there. It's really, you have to stay there for the long time. And touching on what Ido said, I think it's also a great time to ask yourself the tough questions and to see if it's a time to be very resilient and to know if this is really what you really want to do and if it makes sense to you and bringing some value to the world. So yeah, it's those times are good to challenge yourself and to see you're testing yourself. And yeah.
Just to paint it, I mean, my first company in Africa actually did not survive the 2008 crisis. And I think that the point in time we realized it is that we were so deep in legal defense vis-a-vis building at some point. I mean, it's a very long story, and it's not that interesting to most people, I would assume. But at some point, we were so deep fighting our so-called, partners to a certain point in time, and later less partners, versus building something of value to anyone, that there was this point in time where we said, you know what, that is not fun anymore. I mean, I know that entrepreneurship is not fun half the time, at least, but that was really fundamentally not fun. I mean, even when you took a step back, it wasn't fun, because we weren't building anything anymore. And it still took us probably 4 months from that point to shut down. And also good things came out of shutting it down. But I think that, when you stop creating any form of value to anyone, that's probably a good time to start thinking about other alternatives.
Okay, well, I'm sorry, there's lots of other questions which we haven't had time to get to, but what I would say for anyone else listening or watching is you can connect with us on hashtag ATS Connects on Twitter, or tag us on Africa Tech Summit on Twitter. We'll try and continue to connect you with people. If you've got a specific ask, please reach out. You've got our details there on email, or use the hashtags. We'll try and share whatever we can. I think, as Ido and Kenza have shown, really this is a time when investors, tech community, I've seen great initiatives from Kenya, Nigeria, of everyone coming together. And I think for us as Africa Tech Summit, this is an opportunity for us to try and connect you with people if we can. We can't promise. Yeah, I'd like to really thank Ido and Kenza for their time today. And I wish you well. And thanks, guys, for making time.
Thank you so much. Thank you.
And just for future episodes, please stay tuned on Africa Tech Summit. We've got another webinar next Tuesday on Nigerian tech's opportunity as well. So hopefully we can catch some of you then. Many thanks.
Thanks. Bye.
Thank you. Bye.
Bye-bye.